I wonder why nobody is talking about this. Everyone keeps obsessing over trading strategies, indicators, side hustles, passive income, but almost no one talks about the one factor that quietly decides whether you actually get rich or stay broke. And the crazy part, you can't escape it, you can't cheat it, and it affects every single financial decision you make. Let me show you what it is. Hey, it's Alex. I've traded crypto, stocks, and forex for years, built multiple income streams, and coached hundreds of people who wanted financial freedom. And after analyzing thousands of decisions, my own and others, I realized wealth doesn't start with money. It starts with behavior. Today, I'm breaking down the behavioral factor that determines your financial future, backed by logic, psychology, and real examples. Let's get one thing straight right away. Skill doesn't make you rich. Behavior does. Every successful trader, investor, and entrepreneur I've ever met follows a predictable loop, whether they know it or not. It goes like this. Perception, which is how you interpret financial opportunities. Decision, the choice you make under pressure. Action, which is all about your execution quality. Reflection, how you analyze your wins and your losses. And finally, adjustment, which determines whether you improve or just repeat the same mistakes over and over. This loop repeats every single day, with every single financial choice. Most people fail because their loop is corrupted right at the start, at step 1 or step 2. They perceive the market incorrectly, and then they make a bad decision because of it. Their actions don't matter because the foundation was already flawed. So, if this is so important, why does nobody talk about it? Well, there are a few reasons. First, it's not flashy. You can't really sell a behavior loop course for $97. It doesn't have the same appeal as a magic indicator that promises instant profits. Second, it forces people to look in the mirror and see their own mistakes. It demands accountability, and most people would rather blame the market, the news, or some guru. It requires discipline, not dopamine. But let me tell you, smart investors and professional traders study this relentlessly. The same way elite athletes study their technique frame by frame. Because they know that in the long run, consistent behavior beats short-term luck every single time. Let's look at the evidence. Here are the most common behavior failures that I see keeping people broke. First is confirmation bias. This is where people only look for information that agrees with what they already want to believe. For example, someone buys a new alt, they start ignoring all the negative news, all the warning signs, and they only watch bullish videos from influencers who are also holding that coin. The result, they hold on way too long, convince themselves it's going to the moon, and then get absolutely wrecked when reality hits. Next up is loss aversion. Psychologically, humans hate losing about twice as much as they enjoy winning. In trading, this is a disaster. ULLC, a trader refused to close a losing position because closing it feels like admitting defeat. It feels final, so they hold on, hoping it will turn around. A small, manageable loss snowballs into a massive, account-blowing loss, all because of an emotional attachment to being right. Then there's overconfidence. After you get a streak of wins, maybe 3 or 4 good trades in a row, your brain starts to lie to you. It whispers, you're invincible, you can't lose. You've figured this out. So what does the trader do? They double their position size, get reckless, and break their rules. One bad trade, one mistake, is all it takes to wipe out 3 months of hard-earned progress. We also have the short-term dopamine addiction. The modern world has trained our brains to expect fast, instant rewards. Social media, video games, food delivery, everything is on demand. But finance, real wealth building, is a game of slow rewards. It's about compounding over years, not minutes. This mismatch destroys people because they lack the patience to let a solid strategy actually work. And finally, there's inconsistent execution. I would say most traders aren't losing money because their strategy is bad. They're losing because they don't actually follow it. They have a plan, but in the heat of the moment, fear and greed take over, and they do something completely different. Inconsistency is the fastest way to guarantee failure. So how do we fix this? How do we build a winner's behavior loop? It's a systematic process. Step 1. You must define your rules before you even think about touching your money. Rules are what remove emotion from the equation. You need to write down your maximum position size, your stop-loss level, your profit target, your exact entry criteria, and your exit criteria. When you have predefined rules, your behavior starts to stabilize because you're no longer making decisions based on how you feel. You're just executing a plan. Step 2 is to create a decision checklist. Think of this as a firewall for your brain. Before any trade or investment, you run through a simple 6-question checklist. 1. Does this align with my overall strategy? 2. Am I chasing hype, or is this a calculated move? 3. What is the risk-to-reward ratio? 4. What is the worst-case scenario? What happens if this fails? 5. Am I emotionally stable right now, or am I trading out of boredom, anger, or excitement? And 6. Is this decision based on evidence, or am I just guessing? This simple checklist will kill almost all of your impulsive, destructive decisions. Step 3. Track every single move you make. Winners track data. Losers trust their gut. You need a journal where you track your entry price, exit price, your reason for entering the trade, the outcome, your emotional state at the time, and any mistakes you made. Over time, patterns will emerge from this data. That is how you find your specific weaknesses, and that is how you improve. Step 4 is to build a weekly reflection process. It's not enough to just collect data. You have to use it. Once a week, maybe on a Sunday, you sit down and review every single trade you took. You identify the behavior flaws. Did you move your stop loss? Did you enter too early out of FOMO? Then, you focus on fixing just one flaw for the next week. Just one. This small, incremental improvement compounds into mastery over time. And finally, step 5, remove all the noise. Noise is what corrupts good behavior faster than a bad strategy. You need to delete the hype channels, the gambling signal groups, the Twitter drama, the meme coins, and all the low-quality financial advice. Your environment dictates your behavior. If you surround yourself with gamblers, you'll start gambling. Curate your information diet as seriously as you curate your portfolio. Let's make this practical with a few real-world examples. Take a crypto trader. Without any behavior rules, they buy the top of a rally when everyone's euphoric. They panic and sell at the bottom when there's fear. Their position sizes are all over the place. They're inconsistent, emotional, and they constantly lose money. Now, a trader with a solid behavior loop only enters a trade with predefined confirmation. They use a hard stop loss on every single position. They log all of their trades in a journal and they review them weekly to improve. What's the outcome difference? One trader becomes an emotional wreck and the other becomes predictably profitable. It's the same for a stock investor. Without rules, they chase hype stocks they see on social media, buying high and selling low. With a behavior loop, they invest systematically based on fundamentals and a clear thesis, ignoring the daily noise. Behavior creates predictable results. This even applies to a side hustle. Imagine two people trying to start a dropshipping business. One tries 10 different niches in 2 months, gets no instant results, gets discouraged, and gives up. The other one uses a behavior loop. They test one niche, analyze the data, adjust their ads, improve their store, and repeat. They aren't looking for a quick win. They are running a process. Over time, that process builds a profitable business. So let's recap this. Your financial results aren't about luck, they're not about how smart you are, and they're not about timing. They come down to one thing and one thing only: your behavior loop. Fix the loop, and you fix your financial life. If you want me to break down each part of the behavior loop in its own dedicated video, with templates, checklists, and real case studies, tell me in the comments. And if you're serious about long-term financial growth, subscribe. We're just getting started.